everyone, this is Kathy Carter with Carter Coastal Realty. I thought we'd take a look at the economic outlook coming up for this year. I thought we'd also look at some housing numbers and what it's looking like now and potentially in the future. So we'll go on ahead and get started. First of all, the first quarter of this year looks pretty good. January was strong. February we saw just a little bit of slowdown, and same thing in March. We're still doing very well as far as our economy. We did just have a really strong fourth quarter last year, but our numbers are still looking good, but it is slightly trending just a little bit lower, but really not that much at this point. Next thing is the situation in Shanghai. With China shutting down Shanghai, that also shuts down manufacturing and production. So we'll still continue to see some smaller inventories as far as merchandise and product, which will continue to drive inflation and prices up. So inflation went to 8.5% year over year. They are anticipating another 1.5% increase in the second quarter, slowing us down just a little bit in the second quarter, not much, but just enough, and it'll be a direct result of inflation impacting oil prices. With the huge jump in inflation, the Fed will have to do something, and so what they're going to do is they're planning on increasing interest rates 7 more times this year. That doesn't mean 1% each time they make an announcement. You know, they do it in small steps to see the impact. But they are looking at increasing rates and making an announcement 7 more times this year to try and slow down this inflation rate that's running at a 40-year high, I believe. The housing market is being directly impacted by inflation and interest rates, of course. For example, material costs are up 21% year over year, and the interest rates, well, those impact, your buyers and who can affordability in buying those new properties, new homes. Let's talk a little bit about new home sales. New home sales continue to decline. They've been declining for the past 5 months or so. That's strictly tied to, in my opinion, to the interest rates. It's also tied to the additional costs that new construction is finding with supplies being 21% higher than they were year over year. Wages have gone up to 6.7% increase in wages. That still doesn't come close to the inflation rate of 8.5%, which I think everybody is experiencing that shortfall right now. So new home sales really are lagging. They've kind of slowed down. There are a lot of permits that are pulled, but those permits for new homes have not actually been started. But there are a lot of permits that have been pulled. So we have to wait and see how that goes, and it's really going to be tied to the interest rates. So what's interesting to me is new applications for loans, because I've been watching those. They have been trending down since February. So for example, mortgage origination applications, those are for existing home loans. It's projected to continue to trend down, and it's expected to have a reduction of 35.5% compared to 2001. Now that number does sound large, 35% last year does sound large, but you have to remember we had a banner last year with the mortgage rates as low as they were. There were, double the amount of people applying for mortgage originations or new homes, new applications, new mortgages. So while it is slowing down, that 35.5% is higher. So that means that's less buyers in the market to buy existing homes. So to me, that's why those numbers are so key, is just watching who's applying, how many people are applying, because that gives me an idea on the number of buyers that we're going to have in the market. So I can monitor whether it's going to be a seller's market, a buyer's market, and what the trend is leading to. New home purchase applications are still looking strong. They're predicting that it's going to be 4% increase from last year, and that's even considering with the increase in 21% of cost of materials, the 6.7% increase in labor, and they're still predicting that new home construction applications will be up 4%. What's going to be tough is for all those companies that have just ramped up not too long ago when the rates were so low to do refinancing. So the refinancing, they're going to be down 64% compared to last year due to the rate increase. So you're going to be getting a lot of material that says it's time for you to pull that money out of your loan, out of your home, because they want you to refinance, because that's what they do. They don't do the new mortgage origination. They don't do that. All they do, and they don't know how to do it, to be honest, all they do is do refinancing. And so you're going to be getting a lot of materials. You're probably going to get a lot of cold calls about refinancing. You know, just make your best decision based upon the rates and where you are with your mortgage. But the refinancing is going to see a 64% drop estimated. That's what they're anticipating in refinancing. So in summary, with the mortgage rates already increasing this year 1.5%, and the booming economy that we're having, and then now inflation that's up, you know, to an all-time high, the Fed is also already announced that they're going to do, you know, an increase in rates 7 more times this year. They do feel the housing market will probably have, on average, an annual decline for this year, a slight decline, and take some of the buyers out of the market due to the fact that the rates were going to have to be increased so much this year. So that's what they are predicting. We'll have to see what happens, how high the rates truly get, but they have to do something because inflation is just climbing out of control. So we'll just have to wait and see what happens. I hope you've enjoyed this. I tried to just share numbers for those of you who are thinking of buying or selling. If I can help you, or if you'd like me to send you the links to the numbers where I've collected this data from, I'm happy to help you make an informed decision. And thank y'all for joining. And again, this is Kathy Carter with Carter Coastal Realty with your housing market economic update and potential forecast. Thank you. Y'all have a great day.